Good morning. June 1st. May's in the books. So much for sell in May and go away. It was greenish with a lot of ups and downs. And of late, it's been a headline bonanza. You know, headline this, headline that, and most of them don't change the game. So we will ignore the headline as much as possible to avoid as many fake outs as possible and focus on the levels and the charts and the science and the fundamentals, and then the rest will come. So I will start today's rundown. I think we have 90 tickers, but I will have a separate video later tonight. Should be about 5 minutes, and that kind of lays out the week and what I plan on doing, and specifically focus on the indices. So we're looking at the S&P. Clearly, we came within an inch of an all-time high, which is to the left right there. And also, last week we had a burst on a pretty fantastic headline. So think about it logically. The worst possible enemy in the headlines has been tariffs, right? For a while last year, it was inflation. Now it's tariffs. And then for a moment, the courts stopped that eliminated it. So that's the relief from tariffs not being here. So it doesn't get better than that. So for this coming week, if we want to burst through that, we're going to need something better than the most bestest thing ever in this time. So fundamentals, the earnings went out the window. So now we don't have a lot of important earnings coming, maybe Broadcom coming through. So we're going to have to need another catalyst, and these markets are addicted to headlines. So until we get past this 599, 600 zone, I would say it's easier to drift lower if we don't get headlines. That's it. So my strategy is the same, and I'll lay it out tonight. We'll jump into Apple. Last minute of the day, Apple had a burst to pretty much save the indices from a really red outcome. They ended up red on Friday, but Apple did a lot of work last minute. But it's interesting where it went to. So it's been lagging because it's in the line of fire of this boogeyman of China tariffs, because they do have a lot at stake from China. And you can see the burst from that headline and how it came back to 202. And if you look left, that 202 level has been in contention, and it's starting to look like a problem. So for Apple to get to 210, they're going to have to come up with something new. I did an iron condor on Apple between 170 and 220, and I believe it expires this week. If you followed me into it from the live room, you might want to close it for a win. But it's range bound, and until it breaches those edges, there's nothing going to be fantastic out of Apple. So for now, 193 needs to hold, and I believe 208 is not beatable without a specific headline from Apple. So 193. If you lose 193, you're probably going to lose about $5 to $8 from there. If you take out 208, maybe you get the 214 or 215, which were the highs from like last 10 days. Not a lot of good stuff here without a headline. I bet you that stock would soar if they change the CEO. This guy is not good. Adobe, it's a great path, vulnerable. We can draw a puking camel on this one, inside joke. This is a pretty high trajectory from coming at it from the lows that they placed in April. Pretty impressive. A weak spot in the chart. No volume comparatively, like there's no volume support. If we lose 405, 404, we might end up in the low 390s, high 380s to fill this gap. I don't look at a gap and say, oh, it needs to fill. I'm looking at a precariously perched stock. If we zoom out, the story is not as pretty, and they are indeed selling rallies. Look left. A lot of rallies like this one that looked impressive, and they all yielded lower lows. The question is, will this one as well? So this green M on my screen says that we could get to 470. I would say that 440 is very difficult. So let's see the battle around 440. Look at all the volume bars, those orange and blue things that are in the way that are above us. So it's a tall order. I do like where they bounced a prior support zone, and they better not lose it. I don't think they can lose it all by themselves. It's a pretty good P&L. But guess what? Earnings are in 11 days. This one should be interesting to watch. ALAB, if I was long, I would be out. If I was long for a trade, I would be out. If I got long anywhere up here, I would be out because they gave me half my money back or more, I would be out. If I was, if I bought the dip for a trade, out. If I bought the dip for an investment, definitely not. Just manage your investments however you want. Maybe consider selling some covered calls to keep your shares and make some money out of them. The P&L looks pretty good, although it doesn't have a lot of history, but it looks pretty good. So maybe it's another Palantir, who knows. Good recovery. I don't think 112 is easy to take out. Applied Materials, old dog, you know, been around, survived a bunch. Pretty good P&L, no complaints there. My complaint is technical. Once you lost 180, you gave up a lot of control. So now it becomes that green line I didn't draw. It's automatically drawn by the software based on Fibonacci stuff. So 176, 188 is going to be very difficult. This peak and failure to recover is going to be there for a long time, backed up by this candle. So what I'm saying is the upside potential, maybe 192, maybe. So if you're a trader, you can do that. If you're an investor for the long term, maybe it's a good idea to pick up a few shares or sell puts to own shares. I don't know about the timing of them. You know, this is a long-term look, 5-6 years. Nothing wrong with it, except that markets are at all-time highs, and if the markets decide to correct 10% eventually this year, this one may find itself in the low 100s, and it would be better entry. So I wouldn't go all in. Yes, it is tradable, it is investable, but I wouldn't go all in. Maybe selling puts to own shares will probably make the most sense for investors. AMD, I'm long and short. We sold puts on the way down. I shared with you. I personally sold calls on the way up. So I am optimistic, but not very, because the battle with NVIDIA is getting more difficult. NVIDIA prices have dropped, at least the entry prices of their machines, and they need their moment. You know, they need to say we can double our share, our revenue stream. I'm not so sure I believe them yet. So support-wise, 96, super strong. 88, even better. If it comes down to 88, I would dare to catch the falling knife, as they say, one more time. It is possible that it comes down to 93 as part of that red W you see on my screen. Zooming in, now you can see how it can behave to get there. 108, 107 is super important. You lose that, you're going to end up in the 102, 103 area, which is pretty important. I'm going to draw a box if I don't have it already. Let's see if it shows up. I kind of do, that green box. This is an important zone. It will find support. If it falls into the top half of it, I would go long from a short-term perspective. Okay? And until they breach the miracle headline from the courts, that was 117, and then you have a bunch of sellers above that as well. So I wouldn't hold calls. I would own shares and hold them. I wouldn't add to my position. I can start positions by selling puts to own shares or just buying a few shares. I don't like to buy calls because that puts a timestamp. If I buy shares, then I can wait as long as I want. Amazon, my least favorite now. This used to be my most favorite company, and this is the least favorite time for it from my perspective. I personally am having a lot of problems from a user perspective, and this week was ridiculously stupid. And I had an issue. It took 4 people to resolve the issue, and it's actually could have resolved itself with one message. You know, I had a problem with my account. Instead of them alerting me, hey, there's a problem, they didn't say anything. They just shut it down with no message. So I had to reach out to 4 different people to get down to the bottom of it. And it was a 30-second solution. But anyway, so what I did, I stopped shopping there. Now I'm shopping at Walmart Plus and AliExpress, believe it or not. Punishment. So they're having some issues. They are much larger than they were, and they need to reinvent themselves. That was the reason I love that company, because it always reinvented itself. And let's see what the next reinvention is, if there is one. If I take out all the lines and I look at it, so this rally up to the top and then the drop all the way down to this correction that we just had in April, and then coming back to the half is pretty good accomplishment. Anything above that is going to be well earned. It's not going to be easy. And what's the hardest is these pops that it did on the 13th and the 12th of May. The can kick, I call it. This stock went up 10% in one day. Like it rarely does that on its own earnings. And it went up because of a delay in the tariffs. And in fact, the headline was not that great. It was the tariffs are going in now small, and in 90 days, if we don't have a deal, they go up big. That was the headline. This stock went up 10% on that headline. So let's see how long that pop to 216 lasts, 215. I think it's a problem, and I think it's easier to come down to 188 and 184 than it is to go up to 224. That is a range that I would watch. 224 to 184. It's going to be there for a while. And if it loses the bottom end, it'll test the lows of April. It won't do it alone. This is a superb company, and it has a lot of kudos on Wall Street. So I wouldn't just short it. I would just have realistic expectations from the upside. ANF. Good Lord. What? First of all, I have a history with this company. I knew that it rallied on earnings 40%. What? 40%. Oh my God. Can you imagine following it? So I have a tagline, and it's look left. And with the help of a dear friend, now we say also to trade right, correctly. So we look left. If you bought it up here, that's where they fell apart. And it's not a coincidence that they fell apart again from there. Whoever was stuck here said, thank you, let me out. Somebody said, ooh, I'll take that bag of poop you've been holding for a while. And now they're stuck. They do have support. So if I got long anywhere in this zone below 84, I'm okay with that. If I got long at 104, I'm probably stuck for a while. Let's see how this week behaves itself. Can they hold 72? More importantly, can they hold 64? If this stock loses 64, whoops, it's going to be a quick trip down to the 50s. So a lot of sellers confirmed above 88. That is a fact. So manage your enthusiasm on this one for the future. It's a good base. There should be no reason to lose 64. So if I just got long this week, this coming week, or late last week, that's fine with me, as long as I have room to add in case the markets falls apart. Okay, so this one is going into a pretty difficult area of resistance. If I look left, there are multiple fails at 380 and 390. So I wouldn't want to go long into that all in. It does look like a small breakout, but for me, this breakout is going to be difficult. If I look left, it has a lot of potential sellers. Fundamentally, I'm not familiar with the company. It looks pretty decent. So the base below 355 is strong. If you got long anywhere in here as an investment, kudos, that's a good job. AAPL, a stock I don't trade anymore. Now, technically, this shape is vulnerable to get into that support box. Okay, first of all, 345, then 305. I stopped trading the stock because the owners of the stock have no conviction when they let it do all the things it does. So clearly, this is the market maker, Wall Street, taking your money. Look at this box. I'm going to modify this. I want to show you the candles that were involved in this box. So when I'm at a disadvantage, I just stop playing. I leave the court and find a different basketball court to play where they don't cheat. Look at this candle right here on the earnings. It goes up to 365. It goes down to 265 for no reason. Yeah, earnings, but the earnings are solid. There's no reason to sell the stock based on the earnings. Pretty darn impressive P&L, by the way. And then now they establish it as a base. So technically, I wouldn't short the stock because actually, fundamentally, I wouldn't short the stock because of the fundamentals. They're pretty incredible on paper. And technically, it is vulnerable to drop into this red box. But we know the green box is hotly contested multiple times over. I just don't know what to do with this other than buy and hold for the long term and sell some covered calls. They are very juicy. The call premiums are huge. So if you're interested in that, that might be a good stock for it. This guy, I believe, reports earnings this week. Yep. So they've done a lot of work against the resistance. P&L is pretty solid. Okay. So I will be buying dips if the dips come. I wouldn't go long into that, but guess what? If it breaks out of this prior high, they can go to, I don't know, 280, 300. There's no limits to how high it can go. Now, if you're thinking, oh yes, it's definitely going to do it because it has an amazing P&L, I want to remind you what happened to NVIDIA this week. It fell on an amazing P&L. NVIDIA grew 70%, its sales line, and very impressive numbers throughout the P&L and good forecasts, and it falls. So if that's not mathematical proof to you that it's not about the quality of the report for the initial knee-jerk reaction, it's about expectations, I don't know what will convince you. Looking left, if it breaks out above 255, it can go wherever it wants, up to $100. So $50 to $100, technically, I can explain just from a breakout perspective. Is that possible? Anything is possible. Look at this huge pop on the earnings from last year, not too long ago. So who knows what they're looking for? There's definitely not this much change in its fundamentals, right? Yet they find reasons to pop it and drop it. Yeah, definitely. So be careful. Come into the live room if you have access on the day of the earnings, and we will slice it and dice it from the options perspective and see where the money is. Boeing, I'm short right now. I did buy the dip. I sold naked puts and I sold calls or call spreads. I believe I shared them with you. They're up in the 240 zone. So yeah, they're blinking orange, but they're out in time and up in the 240 zone. I don't believe it can easily do more than what it's actually done. You rarely see Boeing rally from 60% without real good reason. Even when the bad issues with the 737 MAX, it didn't rally that much on relief. Well, that's, call me a liar. There's a 50% rally here. So anyway, I look left. Let's zoom out and look left. Now we're looking at multiple years of data. Whoops. Too many years. Here's 5-6 years of data. We're going into an area that has been hotly contested and the bears won. So anything above 220, 230, 240, it should be very, very difficult to hold. So we'll see how that plays out. I realize that my sold calls and call spreads are under fire, but just barely glowing orange. If you have any of my trades and you want help with them, just reach out and I'll tell you what I'm doing with mine. For now, I haven't done anything. I wouldn't chase it long from here. I don't think the P&L has improved at all. And if anything, now it's more hotly contested. Oh, I believe they had a headline of them delivering to China, taking orders from China again. But that's not an incremental thing. They had that, they lost it, now they got it back. So somewhere in this chart, it's already been priced in. Plus, they don't recognize the sale until they deliver the plane, right? So it's out in time anyway. Biogen, this whole group has been on sale because of a multitude of reasons, and they have been very, very active of late. So this particular stock, it has a depleting P&L, which is not great. At least they're stopping the bleeding for this set of quarters, 5 or 6 of them. But technically, 150 should be a problem, that green line. I didn't draw it there. That's of significance, Fibonacci. So I would move that letter R and put another one here. So as you approach that area, and it is an area, you can use that. I would be less excited of starting longs. I would start longs on the dip back into the 115, 120. I mean, it's a good company, clearly, but they're in the line of fire of headlines, and that's one thing you can't plan for. Black Sky Technology. Oof, ominous name. Okay, so I don't know their P&L. They're fairly new, it looks like. 1350 to 14 is difficult. 1410. More sellers at 1550, and it looks like there's a buyer into 850. So 1020 is also significant. So is 12. Berkshire, I'm still short, doing okay, doing really well actually. Okay, so now they've placed the bar at 500 for Berkshire. They've gone below it, but you can see 500, 495, that's where they want to hold. If for whatever reason they lose that, they go into the mid-80s, 486, 485. Those two green lines, I don't remember what they were. Anyway, I think there are buyers between the lower two. And the first one would be the target immediately if we lose 495. So I sold calls and call spreads. I don't own any puts or put spreads, so I don't need it to fall. I just need it not to take off and go up to the highs and make new highs. I have not backed off. I haven't added. It's a great company. And here's my logic. So this company represents the US market. It's been put together. It's made up of a bunch of of a bunch of companies that the best investor of all time has handpicked. So they should represent the market as best as possible, minus some tech. And it's struggling to break out. So this is what the market should be doing, what this stock is doing. So I'm watching it from that perspective. And I don't think I want to invest in it at these levels. I mean, if I start an investment, that's fine. But if I go all in, I'm not so sure that's a good idea. So here's another thing I've been looking at to gauge the market in general, the risk appetite on a global basis. I think, that's not a fact, that's my opinion. I think I can measure risk appetite in the world by looking at how willing they are to buy Bitcoin. I believe this spike that took it to an all-time high was a fear, a run to safety. Like I think something happened in the bond market. I forgot what that was. But they truly just said, screw everything and everyone. Let's just go into something that no person actually controls. It's actually machines, right? Decentralized blockchain. So that's what happened. That yellow thing here is a ghost path that I had. So the first part of it got played out. Maybe they go to the second part. Now, whoever asked about this, I think you should also look at Ether. And hopefully somebody asked for Ether under the letter E's. If not, I'll do it later. They're not working the same way. Like Ethereum is not even close to an all-time high, which it should be. If crypto is the idea, then all of these coins will go, especially Ether. It's the number 2 coin. It is gigantic and it's actually transactional. So it has a purpose. This one doesn't. So this one is a flight to safety. It's like the run for gold. And people say this is better at being gold than gold, which I agree with. So anyway, this one speaks of risk appetite. And last week, it wasn't as happy as the stock market. So it's something to note. CAVA, we bought the dip. And here at 80, I'm not compelled. Yeah, sure. Why not? So them losing 82 can create a push to 72. And if they lose 72, they go back into the 50s. Not my forecast, but it's the risk. So a stock that falls from point A to point B, here I'll see if I can draw it for you. When a stock falls from point A to point B and it tries to consolidate, which is what it did, and then it loses the consolidation, they tend to go to point C. Now, that's not my forecast. You see how they bounced and trying to get back into this box of consolidation, they can accomplish it. They do have multiple support zones, 78, 76, 74, and 68. So I can tell you that I could go long back into that white dashed line as they approach 74 or lower. I believe we sold stupid puts at 35 during the correction. That's how much people panicked. And I would repeat that blindly. In fact, I would move it up to 50 maybe, since I already have money in my pocket from it. P&L wise, it's pretty strong. They labeled it as the next Chipotle. I think there's only one Chipotle, and I don't think Chipotle is still a Chipotle. It's a little bit different. So we'll see how this one performs over time. I would rather be in CAVA than this one. This stock we tried to catch on the way down, and it was very difficult to win with. I gave up on it, so it's too wild. And I can't count on the investors to have logic. So this purple box is a base of sorts, so that's good. So you have buyers at 34. If you lose 34, you test 32 or 30. You should have unbelievable buyers at 30, given this candle. If they lose that, then they go back into the 26, 27 area. So you have support below here, support at 30, and stronger support at 27 or lower. From an investor's perspective, if you bought the dip into 30 or lower, you got yourself a good entry. Charge point, yeah. It's all about the earnings reaction in a few days. So not for me as a concept. EVs, maybe they're here, maybe they're not. Certainly has not played out to the level of ubiquity as everybody thought. 66 cents, this penny stock, I can't stand it, is your support zone start. 58 cents should hold up. Otherwise, you start testing 50 cents and then what? Meanwhile, 80 cents should be an easy breakout. And if you do that, you get to 92 or so. CHWY, that's another stock I gave up on it because, let me zoom out. We went long on the dip and it was unbelievable. The struggle in 2022 to hold the floor was just insane. And I heard all kinds of stupid stuff about it. Losing margins, losing sales. And it's like, where? That's losing out to Amazon or whatever. Like, where? Show me in the P&L. Where is it losing margin? Where is it losing shares? Of course, that was all fictitious, but they sold it down to hell nonetheless. So on a weekly basis, it can continue up to 60 and change nothing. In fact, I would short it at 60 because that's an area that was very pivotal on a weekly basis. So that's like 5 years worth of data. So there's no conviction from the investors in it. They loved it at 112. They hated it at 16. Are you kidding me? That's an investor that's unsophisticated, and I don't want to be in the same pool as them. Meanwhile, if I'm long for a trade, I'm out at the risk of missing out on upside. If I bought the dip from an investment perspective and I tripled my money or doubled my money, I should have enough gumption to sell some covered calls. It is definitely not a starting point. Okay, there we go. Nice work. Costco, they reported and the stock fell, then went flat, and then during the day, as soon as it opened and the market opened, this I haven't seen before. So it stays quiet throughout the reporting process and after, and then the bell rings and it goes to high heaven. I think somebody in the live room said that it got upgraded, or somebody mentioned it from a positive perspective. It's like, duh, that's one of the best P&Ls there. Anyway, you'd think the investors in Costco are a little bit more sophisticated than needing someone to tell them, oh yeah, it's a good company. Psst, it's a good company, always. So buy the dip in Costco. Up here, it's not an obvious entry point. From a trading perspective, if I bought it for the earnings, I'm out because there's a cluster of sellers. So let's look at Costco. It dips, recovers, consolidates, breaks out. Dips, recovers, breaks out. Dips, recovers. Here we are. Breaks out. If so, 1140 is your target. If you want to short it at 11:30 or sell a covered call, that's great. I wouldn't mind selling covered calls right here. I bet you there's gobs of money to be taken. Turning points, 880, give or take $3. Turning point 800, give or take $10. If it ever falls into those zones, you should have the courage to catch the falling knife. And if you want to sell some puts or put spreads down there to create cash, that's fine. But why not do it on a down day? CROX. It's a good trading stock. I've traded it before. I've sold puts in it on bad days, and it's not very liquid in options, but it does fill. I think here, I remember it was in the 40s. Look how choppy this stock is. That's crazy. And the P&L is fairly stable. Crazy stuff. So technically speaking, this stock is falling into a support zone. 97.50 to 92.50 should be solid, but then I'll tell you, you need to hold 85. You lose 85, you're going for a spill. Look at that, the letter R. I didn't add it now, clearly, so genius. Support here. And you better hold that, otherwise target. Okay, and support plus here, I should say, but you better hold it. So now we have the field of play. I bet you we have a letter R also here now. Okay, so that's your field of play, and there's no earnings for another 2 months. You're stuck in this range. Chevron. I don't want to be long any stock where the president said, we're going to kill the price of that stock's thing. Imagine if somebody says, if the president says, or the White House says, I want to reduce the price of the Nike shoes, then it would be, I wouldn't want to be in Nike stock, because their dollar completely depends on the action of somebody else, the government. So these guys make money off of oil. And if the White House is against that, I wouldn't want to be long that. It's just a disadvantage that all the other stocks don't have. So why would I want it? So you see that box that says buyer zone. They better hold it. If this thing clicks below 132, it'll be down another $10, $12 like that. So I'm going to say it this way, same as the other one. Support, not a plus. And then the immediate downside target is this, and that I'm being generous. Okay, so if you lose support, that's what's going to happen. In a series of lower lows or lower highs, like it maybe chops it down. Meanwhile, if it's able to beat 144 by some miracle, it's a sell at 150. In other words, this dip is not for me. And that probably goes for the other one too. Check this out, an incredibly accurate chart. So this has already broken down. This white thing has already happened. Okay, so if I do it this way, it more represent the price action. So we already dipped and we're popping, and we dipped again. So we gave me target 1 twice already, right? So I'm going to leave it there. So we got target 1 twice, dropped, popped, and dropped. If we lose 93, 94, we will finish the job at 72. Now that's not a requirement for me. There is quite a bit of support into 88. So I'm going to say it's fallen into a target zone. If somebody got started long right here, that's a good instinct. That's what you should do. You see a stock you like, it falls into a support a place where you actually foresaw as possible, that would be a good one. But I'm concerned as to why are the sales so weird? One quarter it's 1.8 billion, the next quarter is 1 billion. It's just weird. Seasonality, I mean, I didn't see it last year, so maybe it did happen. Anyway, pay attention to the fundamentals. Meanwhile, a month and a half until their next earnings. So I'm saying that rallies into 125 are exits, and you better hold support. Maybe you can sell some puts and put spreads. You know what? I'll just add... Stupid platform. Anyway, I don't even know how to add it to another list. Like, I'm in this list. If I add it here, it gets added to this list. They changed something. And anyway, I can't add it. Control A, maybe Alt A, Shift A, Alt A. No, that's alerts. Anyway, wouldn't mind selling a put to own shares if I wanted to own shares as opposed to buying shares right here. DG. I still think it's vulnerable. The way this chart says, vulnerable to a descending. The letter R, they overdid it. They went through the letter R, so that was back here. They went through it, and now they're falling into it. It's no longer resistance. It's more like, okay, can they hold this? So it's on the support side. So they broke through the R, and if I were to be honest about it, I will say now we have support here because that's what they broke through. But they're still vulnerable for this orange thing. They overshot, and they're still vulnerable. I would say the vulnerability now is down to 92, 91 to the letter S, which is not a big deal, right? So from a trading perspective, you have earnings in 2 days. I wouldn't do anything with it. It's a guessing game. ELAN. Health. Wow, healthcare company doing this well. That's respectable. From a technical perspective, I'm out. Look left. Look how many times they sold it hard right there. That's not for me. Getting here is great. Going through here, I think, is near impossible. We'll see. P&L is pretty wonky too. That's pretty weird. Weird stuff going on in this chart. End phase. I wouldn't touch it with a 10-foot pole. I cannot believe that at one point we sold puts at 100 and 112 and we made money. And then this. The earnings are falling off a cliff. So you need to see if that's a temporary thing. And mind you, this was an arrow that we outlined from up here at 160. And they're not able to hold it. So it's in free fall, literally. And look left. Okay, so that was a base from 2019. But it's a very wide zone. So who's to say it's not at 20 or 25 or 16? So pretty scary stuff. I wouldn't want to get engaged with it end phase. If you're an investor and you know the industry and you know this P&L, this looks like a pretty fantastic place to start longs or add to your longs. But I don't know enough about it. So all I know is that it had an advantage in the technical aspect of how they have microinverters in all the panels, which makes it easier to work with. But you should revisit that. Who is this? Flagstar Financial. I don't like financials altogether. But this one, at least, it gives you a pretty nice range. They have sellers at 13, buyers at 10. Sellers at 13, buyers at 10. There's a set of buyers at 1050 here. If you take out 1350, you might get to 15. GE. Oh my God. Don't look, Nick. Don't look. This is going to be the short of the century. What? Okay, then. All right. This is the .com level. Oh, man. I'm glad I don't know how to add it. Add GE. Oh, there we go. 514. What was the other company I wanted to add? Deckers? Oh, it's already there. Okay. I don't know what to say. How about this? Nope. NOPE. Not an obvious point of entry. You said it. I said it from here to here. And I'm right about from here to here. It's not my style. If you are a momentum trader, that should never be in your vocabulary. NOPE. It should always be what you do for a living. But if you're an investor and you waited this long, it literally rallied better than the stock market. So check this out. This company has lost almost half its sales. Is rallying 50%, almost near its all-time highs. That is, I don't know, 24 years old. And a company that grows its sales 60% on a consistent basis, 40 to 60%, is the third largest company on the planet, has the best future in the world, proven growth path, can't catch a bid. That is right there. If you just GE versus NVIDIA, where the money is flocking, it tells you how stupid this market is from a logic perspective, right? So technically, I will try to short GE again. I've shorted it several times. I've won overall. I will try to short it somehow, and I'll post it with a big caveat. Don't do this unless you have a good, strong stomach. Okay. All right. I will do that this week and see if I can post it. See, I don't have a beef with GEV because I don't know it. And it's one of the good areas that they carved out of. In fact, the reason why I think GE is a short is because of the success of GEV. So anyway, they carved out all the good pieces into different little companies. So I have no beef with this one. I don't know anything about it. This could be a starting point for all I'm concerned. Although the P&L is not that great, but look at it go to the moon. It's what Wall Street is buying, right? It's like you buy a Range Rover and nobody wants to buy it from you after the fact. It's worth $100,000. They'll offer you 20. And in this case, it's the exact opposite. You're driving a jalopy, but everybody wants it, so everybody will pay you up the money. Like they'll pay $140 for a Rivian, even though it's not even nearly as good as a Range Rover, just to use an analogy. And with that, thank God, the first video is over.